Hey everyone, Daniel here, and welcome back to another video. Voyager Digital just went ahead and released some game-changing news for the month of April regarding financial data. So in this video, we're going to go through exactly what they reported, the implications that it has on the company, and lastly, we're going to go through my short-term and long-term price targets and see how this data plays to that. So if you enjoy these Voyager updates, feel free to share them with a fellow Voyager investor, and let's get into it. So Voyager Digital provides business update for the month of April. First and foremost, I just want to say this quickly. The CEO, Steve Ehrlich, said they're going to be transitioning to more of a quarterly approach when it comes to reporting data, but I think after he saw the numbers that they just released, he couldn't hold himself back from actually reporting this data in April. But I think going forwards, we might continue to see this monthly approach when it comes to reporting data, but they are slowly transitioning more to a quarterly approach just by the way they reported this data. Originally, they reported this all straight up. They said, all right, we reported this much in revenue, this much in trading volume, this much in assets under management, but this time we only got a few statistics. Assets under management now exceed $3.3 billion. Absolutely huge. If you follow Voyager Digital whatsoever, you'd know that assets under management is one of the best ways to really calculate the growth that Voyager is experiencing as a platform. So seeing this increase from $2.7 billion in the month of March to over $3.3 billion in the month of April is phenomenal from a growth standpoint. And I think this is associated with two main things. One, an increase in cryptocurrency prices, and two, new account growth. We saw Ethereum just break $3,000 yesterday, and now with new account growth, we saw Voyager Digital have essentially 130,000 new funded accounts added to the platform for the month of April. This is absolutely huge, guys. Just a few days ago, I highlighted an interview that Steve Ehrlich did. And in that interview, he said the growth that Voyager is going to be experiencing in the month of April is at least parallel with what we saw in March, which was right around 95,000 new funded accounts. So now we're seeing 130,000 new funded accounts added to the platform throughout the month of March, which means we're experiencing exponential growth with the Voyager platform. We're not seeing parallel growth, we're seeing exponential growth. And obviously this is a larger part of their monthly trend of both very strong account growth and growth in principal value traded, which is how Voyager makes money. Now, the Voyager model has always been about offering the widest range of coins for retail consumers, and consistent with that, we have seen increased trading in the alternative coins. To continue the trend, the company plans on adding additional coins over the next 60 days as the increased alternative coin volume has driven an increase of over 45% in average basis points earned per trade. This is huge, guys, and we really got to break this down right now. We are seeing a massive increase in the amount of Voyager customers that are trading altcoins, alternative coins. These are coins with smaller market caps, smaller prices, and thus are much more profitable for Voyager. So what the company is seeing is an increase in use in altcoins. They're saying, all right, we're going to play to the consumer's demand, and we're going to continue adding a lot more of these altcoins, which is essentially their plan over the next 60 days to increase the supply of altcoins on their platform to 50 to, what we end up seeing is unknown at this moment in time, but it wouldn't surprise me to see them increase that number by 5, 10, 15, 20 different altcoins, which will obviously continue to support that growth in the altcoin market. Now, because of this increase in altcoin trading, we're seeing an increase of 45% in average basis points earned per trade. What does this mean? Let's say originally Voyager earned 1% from each transaction. So from every $100 in transactions they had, they earned $1 in revenue. What they saw throughout the month of April was them not earning $1, but we saw that increase to $1.45. Now that's obviously if Voyager earned 1%. But they actually earn much more than 1%. And we're going to go through this. I actually have like a chart that puts all this data into perspective and compares it to like February, March, and whatnot. But this is absolutely huge. And I want to take you guys through to this part of their slide deck. They are a company with a land and expand style approach, where their goal is to land a consumer and slowly expand their opportunity as a customer as time goes on. So what they do is they used interest, right? They provide interest on over 20 of their tokens as a way to compel and attract new customer deposits. This is how they drag customers in. Then, once the customers take advantage of that interest, they essentially expand to the major coins. This is like the XRPs or the Ethereums or the Bitcoins. Obviously, this is a little further down the line of cryptocurrencies and thus generates more profit. Obviously right now with interest, Voyager isn't earning any money from the interest. They actually give 100% of that back to the consumer because they're content with the revenue they're getting from the spreads whenever a transaction takes place. So with the major coins, they're not as profitable as the altcoins, but they do certainly make money. But the main profit driver for Voyager as a company is the alternative coins. Why? Because a smaller price, a smaller market cap means higher spreads and more revenue per trade. So what we saw throughout the month of April is a massive increase in the trading of altcoins. And because of this, the profit that Voyager makes off of each transaction increased substantially alongside that. And we'll see how this plays to my revenue projections for April going forwards. We continue to scale our infrastructure with a 2021 goal to accommodate 10 million users. So obviously Voyager, back in January, where they experienced a surge in demand due to the Robinhood problem, they set out to do a 120-day system upgrade that would eventually let them accommodate 10 million active users. So by the end of May, potentially early June, we expect this system upgrade to finish. And at that point, we expect Voyager as a platform to be able to handle 10 million active users at once. Currently, this number sits at a couple 100,000, so seeing 10 million sets them up very nicely for growth going forwards. We have made significant increases in technology and support staff as we strive to provide retail investors with the most trusted, secure, and user-friendly platform for investing and trading the largest selection of digital assets. So when we look at Voyager, what they have done over the past couple of months, we've obviously seen some delays on the platform when it comes to withdrawals, deposits, and obviously the waitlist. So what they've done, they've continued to upgrade their systems. They've hired a lot of new staff to help with these withdrawal problems. And with that, we've seen a massive decrease in the amount of problems that customers are experiencing. We're seeing a lot, quicker transactions when it comes to potentially the waitlist, when it comes to deposits, things along those lines. So we're seeing Voyager handle this problem incredibly and setting themselves up for massive growth in 2021. Now, what we need to do as investors is fill in the blanks to determine where revenue could potentially be at. So what I'm going to do is put this into a graph so you guys can see exactly what potential revenue, potential principal value traded could be at. Here is this graph. What we see and what we know is that assets under management are now $3.3 billion. We also know that new funded accounts were 130,000 for the month of April, leaving us a total funded account number of 400,000 total funded accounts. Obviously, this is massive growth that we're seeing, actually exponential growth throughout 2021 here, which is absolutely phenomenal. New verified users, they didn't give us this number specifically, but we can assume this grew at least by the same amount as total funded accounts. What we also know is that essentially the percentage of principal value traded that goes down to revenue was 1.25% in February. And in the month of March, they didn't explicitly say this, but we can assume this stayed the same. In the month of April, they announced that this number increased by 45%. So if we increase 1.25% by 45%, we get right around 1.81% in the percentage of principal value traded that goes down to revenue. So, since principal value traded generally tends to track assets under management, we can expect revenue in the month of April to be nearly $60 million. Absolutely huge, guys. Now, one thing to note, this number here, this 1.81%, is not sustainable generally speaking. I think this number will eventually kind of cool off to potentially near like 1% down the road. But this is absolutely phenomenal from Voyager from a short-term perspective for them to make as much money as possible. And seeing this increase is absolutely phenomenal, guys. To see them do $60 million in revenue for the month of April, obviously this is my projection here and it isn't certain that they're going to release this, but $60 million in the month of April. Guys, in quarter one of 2021, I project them to do roughly $59 to $60 million in revenue. They did exactly what they did in January, February, and March put together throughout the month of April. And I think that shows the growth that the Voyager platform is experiencing. Now, when we look at total funded account growth, I want to play around with this and see where this number could potentially be at by the end of the year. So obviously right now we have them sitting at around 400,000 total funded accounts. Let's assume that Voyager continues to grow parallel with this, where they continue to see account growth of potentially not 120,000 here, but actually 130,000, exactly what they experienced in the month of April for every single month following. We can expect total funded accounts on the Voyager platform to reach 1.4 million funded accounts by December. If we end up seeing that, guys, that is a massive increase, almost a 3x or over a 3x in the total user base behind Voyager, which in turn essentially allows us to expect at least a 3x in assets under management, at least a 3x in revenue, at least a 3x in principal value traded, and other things along those lines. So seeing this growth from Voyager for the month of April, I think it sets them up very well throughout the rest of the year to maintain this growth and continue growing exponentially. Because let's assume that they potentially, this average number of monthly growth actually increases to maybe 150,000. Then, we can expect funded accounts to be almost 4 times what they were in April by the end of the year. And obviously this translates to a massive increase in valuation down the road. Now, what I want to do next is take a look at my 2021 and 2024 price targets to determine where Voyager could be trading at given this data that we just received. Here is my 2021 data. What we saw throughout the month of March, February, and January is essentially revenue of 8.5, 20, and $31 million. Assuming that Voyager experiences $59 to $60 million in revenue for the month of April, and they maintain a growth rate of potentially 15% month over month for the remainder of the year, we can expect revenue of $1 billion for the year 2021. Now, this 15% here, when I look at this number, this is conservative because they just went ahead, grew revenues almost 2 to 3x from January to February, 50% throughout the month of March. They doubled it again throughout the month of April. So this 15% number could very well be conservative, but again, I like to be conservative with my numbers just to get a good sense of, what the potential conservative case can be. So given this $1 billion in revenue and their current valuation, we can expect with a price to sales of 20 to get to a market cap of $21 billion or a price target of potentially $123 per share by the end of 2021. Now, obviously, if this compounded monthly growth rate increases throughout the rest of the year to potentially 20%, which I think is quite likely, we obviously get revenue increase drastically, and we also see that translate to a higher share price. So when you ask me, where do you think Voyager could be trading at by the end of 2021? Given these numbers, I could very well see them trading at a potential price target of at least over $100 per share. Now, obviously, this is heavily dependent on the vibe, or not the vibe, but just generally speaking, the sentiment around cryptocurrencies as a whole. If people are excited about cryptocurrencies, this valuation might go to a higher price to sales ratio. I think a 20 is fair for this company given their growth and given that they're experiencing EBITDA margins of over 50%. So given that, I think a 20 is actually pretty dang fair, if not even very conservative. But given that, this market cap would not be surprising. Let me know what you guys think about this in the comments section. Next, I want to look at my long-term price targets looking out to 2024. And this is heavily dependent on an increase in assets under management, up to $50 billion, which is essentially their goal to achieve by the end of 2023. And in my opinion, as long as cryptocurrencies don't crash and go into a bear market, I think this is very, very achievable. Now, what I use is an assets under management monetization rate of 10%. Now, I want to put this into perspective for you guys. Let's assume that Voyager does right around $1 billion in principal value traded. They take right around 1.8% from that, which essentially gives us a number of right around $18 million. That's for a given month. Let's assume this repeats for the remainder of the year for the entire 12 months. This gives us revenue of $216 million. That is essentially an assets under management monetization rate of $216 million or 21.6%. In my target, I assume an AUM monetization rate of 10%, over 50% lower than where it is today. Now, this number expects a decline in the total amount of money they're making from each transaction, which currently is right around 1.8%. I think this will decline to closer to 1% down the road. And I also expect a decline of the total principal value traded compared to their assets under management. Right now, this is pretty much even. So for every $3 billion in assets under management that they have, they do right around $3 billion in principal value traded on a monthly basis. I don't think this is too sustainable, so I expect that to decline as well. The company said they expect around 10% in the longer run, so that's what I'm using, which gives us total revenue of right around $5 billion. So seeing these numbers here, although they don't change my long-term vision with the company, I think they might speed it up. And they really confirm this, essentially this number here of potentially reaching $50 billion in assets under management by the end of 2024 or 2023. And given this number here, again, we can expect total net income of right around $1.75 billion, given what Steve Ehrlich, the CEO, said about their profitability. Use a price to earnings ratio of 40, and you get a price target of right around $400 per share, given the current share price. So anyways, guys, let me know what you think about these numbers in the comment section down below. I think these numbers are absolutely phenomenal for Voyager from a perspective of just generally speaking growth. And if we see Voyager continue this growth throughout the remainder of the year, we can expect big things to happen to the stock price. So anyways, guys, thank you so much for watching. I really appreciate you being here, and see you all next time.